All right, let's turn back to the major indexes. Joining me now is Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management. Doug, it's good to have you with me this afternoon. Look, a wild day on Wall Street. The major indexes did edge lower, but the meme stock mania back in focus. What do you make of it?
Yeah, it's kind of normally June is a pretty calm month in the grand scheme of volatile months. We don't usually get extreme volatility till September, October. So you kind of expect the market overall to be a little bit calm, but that makes sense that the meme stocks are all over the place. And that's because everyone's just trying to get their footing. The market's pretty close to its all-time high. We're very, very close and looking for some direction. Tomorrow's jobs numbers are important, but the economic environment looks really, really good. The numbers look really good. Everything looks good as a backdrop. So I think that this is just more the speculation around the edges.
Okay, GameStop, AMC, some of these companies that we've been following, are they on your radar? Are these companies that you're playing in or trading in at all?
The problem, well, for us, what we like to do is we like to have companies that have actual earnings that you can count on, that are growing, sustainable. I mean, the business model on some of these companies at the current valuations don't really make sense. So for us, it's not really a long-term investment. It would be more of a speculation, short-term bet. There's nothing wrong with that, but it isn't anything at this point from a business model standpoint that we would really want to think about owning for the very long term. Look, we could be wrong there. These could turn out to be low valuations and their business models are excellent. But as it looks right now, it's hard to see that. And I think there's a lot of pent up, built up people in that. So we sort of take a back seat and maybe play around the edges rather than make it a long-term core position like a more fundamental company that has earnings and growing, has great management and those kinds of things. That's what we're looking for.
Okay, so a speculation bet, not a fundamental play. These values, the stock less than $2 at one point earlier, just in the past 12 months. And now we did see it rise above $72 a share just recently. So pretty astonishing. Plunged 30%, then rebounded, did close down negative, and I think that's exactly right. Real concerns about the valuation. No doubt this company will have to innovate in some form with the proceeds from that stock sale to make itself more relevant going forward. The pressure that's on companies now like AMC and like GameStop to innovate. I mean, realistically, even though the valuations now don't make sense, are these companies that you think will have new power to reinvent themselves and potentially be companies that stick around in the future?
I mean, perhaps. I think, look, if you think about fundamental investing, and that's really what you want to do for the core part of your portfolio. Look, the explore part, the speculation part, there's no problem playing these trades, playing the momentum. Those are all great things. But when you look deeper and you say, look, what's the business model for AMC, even if they do this? Look, people are coming back online. Everything is looking good. Things are opening. I was joking around this morning that on the way into work today, I only saw one person driving themselves alone in the car with a mask on. Before, I used to see a lot. So I think things are getting more open. And as they do, maybe they'll go out and people will go to the movies and they'll do more of those things. But GameStop has to innovate. It can't keep doing the way it was in its world. So perhaps they do. I just don't think that the expectation of what we'd want to have happen for this to be justified is really there. I'm not saying they can't survive and do well, but I just have a hard time chasing things like this when there are values out there that we could have. There are good values out there.
Let's talk about those values in a second. I should just note that the volatility in AMC continuing after hours. The stock closed down 18%. It's higher by several percentage points now after hours. So obviously the whipsaw continuing. I think it's also worth noting, Doug, these technology names continue to decline in the wake of positive economic data. But the Dow, for instance, some more of these blue chip names which are focused and would benefit from a reopen, they actually did perform better. Ahead of that jobs report tomorrow, I mean, is this the story? Will technology continue to decline as the reopen furthers its way ahead, while the Dow, for instance, might do well?
Yeah, I don't think you want to underweight technology, but I don't know that you want to have a massive overweight, which has served you well during the pandemic as we exit out of it. There are still some good values in the tech sector, but I like to play things that are a little bit less on the risk scale when the market's at an all-time high or when these stocks are an all-time high. You take a company like Broadcom, which is coming out with earnings, and if you look at the beta, and everyone should know what the beta is of every stock and every fund and every ETF they own. But if you look at it, it's got a risk level less than the market. And those are the kinds of tech plays you want to play at this point. Something a little bit less volatile than the market that has significant upside. There's a lot of value there if you want to play in tech. If you want to go outside of there, you look to utilities, you look to healthcare, you look at some other areas. Those are the ways you play the market at the all-time high with the core part of your portfolio, not the speculative stuff that we're having fun with the meme stocks.
All right, focus on the fundamentals. Good reminder, that's Doug Flynn, certified financial planner and co-founder at Flynn Zito Capital Management. Doug, thank you again.